Data storage just had one of the biggest breakouts of the decade. From 2025 to 2026, these 7 companies saw explosive price gains, driven by an unprecedented surge in AI memory demand, hyperscale servers, and massive big data workloads. As AI models get larger and enterprises store more data than... First up is SIMO, one of the strongest data storage performers of the past year. SIMO is the global leader in NAND flash and SSD controllers, the chips that power AI servers, cloud storage, and high-performance robotics systems. In 2026, the company delivered a massive plus 112% revenue surge year-over-year, backed by strong free cash flow and explosive demand for AI memory. With a 32% price upside still on the table and 72% institutional ownership, SIMO has become one of the most heavily backed storage plays in the entire semiconductor sector. Here is one interesting fact about SIMO. It has NVIDIA and Google as its customer. Next is SNDK, one of the absolute hottest stocks of 2026. SNDK is a pure-play NAND flash powerhouse, perfectly positioned for the explosion in AI memory, hyperscale storage, and enterprise SSD demand. The numbers are insane: a 372% year-over-year revenue surge, a $42 billion backlog, and still a 24% upside ahead. And here's the wild part. SNDK was spun out of Western Digital, and just a year ago it traded at only $40. If you're thinking about amplified exposure, investors even track the 2 times leveraged ETFs SNDG and SNXX to ride the momentum of this storage rocket. Third on the list is STX, Seagate, the backbone of hyperscale storage. Seagate is the leading HDD supplier for cloud and AI infrastructure, and despite being a mature player, it's still delivering serious growth. 54% revenue increase year-over-year, strong free cash flow, and a 15% upside ahead. The company is already sold out through 2027, thanks to massive demand from hyperscalers. Fun facts. STX once traded at $151 in 2025. It leads the industry in HAMR technology with its Mosaic platform, and it's qualified with 5 of the world's largest cloud customers, making it one of the most essential AI-era storage providers. Fourth is WDC, Western Digital, one of the core leaders in AI-driven hard disk storage. WDC delivers 36% year-over-year revenue growth, a solid 30% price upside, and remains one of the 2 players in the global HDD duopoly alongside Seagate. Its drives power AI training clusters, hyperscale data centers, and massive enterprise storage systems. A fun bit of history. WDC traded at $73 back in 2025, and today it's positioned as a critical supplier for the next wave of AI infrastructure. When it comes to high-capacity HDDs for cloud and AI workloads, WDC is one of the most essential names in the entire storage ecosystem. Next on the list is Micron, ticker MU, one of the most important AI memory companies in the world. Micron is the only U.S. leader across DRAM, NAND, and the ultra-critical HBM memory that powers modern AI training. And demand is off the charts. HBM capacity is reportedly sold out through 2026, showing just how essential Micron has become to the AI infrastructure boom. Micron's financial momentum is massive. The company delivered 346% year-over-year revenue growth, with strong margin expansion and models forecasting over $25 billion in free cash flow in FY 2026. This isn't a cyclical memory story anymore. It's a structural shift into long-term AI infrastructure. Institutional ownership sits at nearly 80%, backed by a strong buy analyst consensus and a solid balance sheet. With a price target around $1,502, Micron carries an impressive 56% upside, supported by one of the strongest demand environments in semiconductor history. Next up is Rambus, ticker RMBS, one of the highest margin plays in the entire AI memory ecosystem. Rambus isn't a traditional chip maker. It's the leader in memory interface technology and IP licensing, which makes its products absolutely essential for AI servers and HBM memory systems. Every time AI infrastructure scales, Rambus benefits. The financial profile is strong and steady. Rambus is forecasting $825 million in revenue for FY 2026, up 17% year-over-year, and nearly $988 million in FY 2027, another 20% jump. Free cash flow is projected around $262 million, supported by gross margins near 80%, thanks to its high-margin royalty model. Institutional ownership is extremely high at about 88.5%, showing strong sponsorship from major funds. Analysts sit between moderate buy and strong buy, though insider activity has leaned towards selling recently. Even so, the stock carries a consensus price target of $148, representing a 47% upside. In short, Rambus is a pure AI infrastructure enabler. Its memory interface chips and royalty streams are critical for HBM and AI server performance, making RMBS one of the most profitable and strategically positioned names in the entire memory technology space. Now let's talk about SK Hynix, ticker SKHY, the global leader in high-bandwidth memory and one of the most important companies in the entire AI supply chain. SK Hynix is the key HBM supplier to NVIDIA, and it currently dominates the market with over 50% share, leading the industry into the next generation with HBM4 production. Financially, SK Hynix is in a record-breaking phase. For FY 2025, the company reported KRW 97.1 trillion in revenue, up 47% year-over-year, and an incredible KRW 47.2 trillion in operating profit, more than doubling from the previous year. This surge is driven entirely by AI memory demand, giving SK Hynix one of the strongest profitability profiles in the semiconductor sector. The company also maintains a net cash balance sheet, highlighting its financial strength and long-term stability. Institutional ownership is strong worldwide, and SK Hynix is deeply embedded across major AI infrastructure deployments. Analysts see continued momentum, with a price target around $190, representing 13% plus upside. With the 2026 HBM market expected to reach $55 billion, SK Hynix is positioned as one of the top beneficiaries of the AI memory supercycle. In short, SK Hynix is the global HBM champion, powering the fastest AI accelerators and setting the pace for the entire memory industry. Finally, we have the DRAM ETF, the Roundhill Memory ETF, the first pure-play U.S. fund focused entirely on AI memory. This ETF gives investors direct exposure to the explosive growth in DRAM, HBM, NAND, and SSD technologies, making it one of the most targeted ways to participate in the AI memory supercycle. The fund has grown rapidly, now managing $24 billion in assets, with strong institutional inflows throughout 2026. Unlike broader semiconductor ETFs like SMH or SXX, DRAM is highly concentrated in the companies driving AI memory innovation. Its top holdings include Samsung, SK Hynix, and Micron, which together make up roughly 73% to 75% of the entire portfolio. Additional positions include Seagate, Western Digital, and SanDisk, giving the ETF full coverage across both memory and storage hardware. The investment thesis is simple. As AI accelerators scale, HBM and DRAM demand skyrockets, and this ETF captures that trend directly. With the 2026 HBM market expected to reach $55 billion, DRAM ETF stands out as one of the fastest-growing thematic ETFs of the year, offering clean, concentrated exposure to the companies powering the AI memory boom. In short, DRAM ETF is the purest way to invest in the AI memory revolution, bundling the sector's biggest winners into one high-conviction vehicle. This table ranks all 7 data storage stocks by their upside potential, and the DRAM ETF provides broad coverage of nearly every major player in the sector, plus 3 2x leveraged ETFs for investors seeking amplified exposure to the AI memory theme.